Under Armour came out of nowhere in 1996 to challenge industry giants like Nike and Adidas. But recently, the company's been accused of accounting fraud. So I'm going to dig into the details here today. Under Armour was founded by Kevin Plank, a football player at the University of Maryland. After starting the company in his grandmother's basement, Plank led Under Armour to rapid growth. By the time it went public in 2005, Under Armour was profitable with $281 million in sales and positive cash flow. Under Armour's sales continued to grow after the IPO, and the future for the company looked bright. But in 2016, Under Armour got some bad news. One of its largest customers, Sports Authority, was going bankrupt. Under Armour had achieved 26 consecutive quarters of 20% sales growth, and it looked like the streak could be over. And this is where things get sketchy. Under Armour allegedly started pressuring its customers to take more product than they actually needed. Customers went along with this as they were given discounts and told they could return extra product the next quarter. And that they did. According to the Wall Street Journal, truckloads of unopened boxes would come back. After reading this, I dug into Under Armour's financials to see if this actually happened. I pulled Under Armour's 10K for each of the past 8 years, and I focused on an account called Reserves for Returns, Allowances, Markdowns, and Discounts. This is a contra revenue account that Under Armour records whenever it makes a sale. In its 10K, Under Armour says, quote, "We record reductions to revenue at the time of the transaction for estimated customer returns, allowances, markdowns, and discounts. We base these estimates on historical rates of customer returns and allowances." So if Under Armour really did start pressuring customers to take early delivery of product around 2016, we should see the reserve account increase at a faster rate than sales did during that same time period. And this is exactly what I found. In 2016, Under Armour's gross sales, which were sales before subtracting the reserve account, increased by 22%, while the reserve account increased by 54%. The next year, in 2017, gross sales increased by just 5%, while the reserve account increased by 68%. The reserve account was increasing a lot faster than sales. But that's just one way to look at this. We can also calculate the percentage of sales that Under Armour estimates will be returned. This figure was consistently around 2% between 2012 and 2015. Then in 2016, it increased to nearly 3% before jumping to nearly 5% in 2017 and 5.5% in 2018. It decreased in 2019, around the time the SEC began investigating Under Armour. These spikes in Under Armour's reserve account around 2016 are consistent with the story that Under Armour had been stealing sales from future quarters by pressuring customers to accept more product than they actually needed. Now, there's nothing wrong with applying a little pressure to make a sale, but if you know the customer doesn't want the product and they're going to return it anyways, then it's not really a sale. At best, it's a sale for a future quarter that you're trying to record in the present quarter, and that is a violation of GAAP. Under Armour's CFO stepped down after the company's 20% sales growth streak came to an end, and the company went through 3 CFOs in just 2 years, which is another red flag. Now, Under Armour has been struggling, so it wouldn't be that surprising if it was aggressively pushing its products. Under Armour apparel doesn't seem to be as popular as it once was. The company had to write off $5 million of inventory in 2017 and another $20 million of inventory in 2018. Now, none of this guarantees that Under Armour committed accounting fraud, but the financials paint a picture of a company that was increasingly having trouble selling its inventory, and thus might have started aggressively pushing that inventory on retailers, which was suggested by the increased rate of returns. We'll have to find out when the SEC releases the results of its investigation whether Under Armour actually committed accounting fraud.